Hi ladies and gentlemen, welcome to the Invest with Dennis channel. Today we are focusing on the best performing stock in the stock market as of August 2026. SanDisk, ticker symbol SNDK. Fiscal Q4 2026 earnings breakdown and company history. And to start us off, I will mention Proverbs chapter 21 verse 5. The plans of the diligent lead to profit, as surely a haste leads to poverty. The plans of the diligent lead to profit, as haste leads to poverty. We will give you a brief history of SanDisk, from legacy flash pioneer to AI storage powerhouse. SanDisk Corporation's company history. Founded in 1988, SanDisk founded as NAND flash memory pioneer. Memory cards, USB drives, SSDs. 2026 acquired by WDC. Western Digital acquires SanDisk, folding flash into storage portfolio alongside HDDs. 2023 split announced. WDC's board authorizes separating the HDD and flash business into two public companies. February 21, 2025, separation completed. WDC distributes 80.1% of SanDisk shares to shareholders, tax-free returns a 19.9% stake. February 2025, SanDisk debuts. SanDisk begins independent trading on NASDAQ under ticker symbol SNDK. 2025-2026 AI-driven rally. Surging NAND and SSD demand from AI data centers fuels explosive growth and a historic stock rally. Q4 fiscal year 2026 results. A blowout quarter reported August 5, 2026 after market close. $8.97 billion revenue, up 372% year over year. $39.25 non-GAAP EPS beat estimates by 14%. 84.6% gross margin versus a year ago. GAAP net income $6.9 billion for the quarter. Sequential revenue climbed 51% quarter after quarter as the board approved an additional $14 billion share back, bringing total remaining authorization to $15.5 billion. Estimates versus actual, a clear beat. How Wall Street expectations compared to reported results. Estimates for revenue $8.3 to $8.42 billion. Actuals $8.97 billion, and that's a beat. Non-GAAP EPS $34.24 to $36.15. Actuals $39.25, and that was a beat. Management own guide revenue $7.75 billion to $8.2 billion. Actuals $8.97 billion. Management's own guide EPS $30 to $33 a share. Actuals $39.25. Despite beating on every measure, SNDK shares initially fell over 8% after hours, before narrowing to about -4%, easing off recent highs after such a dramatic run. So this is just a breakdown of estimates versus actuals, and it was a clear beat in all categories mentioned right here. Segment breakdown. Data centers leads the way. Q4 fiscal year 2026 revenue segment in millions. So this is just kind of a brief chart of just how the stock has been performing in different segments. You know, you have the data center aspect of things up 103% year over year. Hyperscale AI demand. We have the edge aspect of the business up 48% year over year. Enterprise SSD strength. Consumer down 32% year over year. Continued softness. So as other business segments like the data center and the edge part of the business are growing, from the consumer demand, it's a downturn, but the demand for AI and the AI hype is far making up for regular consumer demand. So it's a give and take type of situation. Full year, fiscal year 2026, the turnaround year. Fiscal year ended July 2026 versus fiscal year 2025. And these are the numbers. Total revenue, 2026 was 20.248 billion. 2025 was 7.355 billion. It's 175% year over year change. GAAP net income is 11.4 billion. Last year it was minus 1.641 billion. Swing to profit. So it went from being unprofitable to being profitable in a year, and the swing is crazy. GAAP diluted EPS, non-GAAP EPS, and these are some of the figures right here. Data center revenue. Look at the difference. 437% turnaround from a year ago. This is hyperscale AI demand is a huge reason behind this. Edge revenue, 195% turnaround just within a year. It just shows you how once a market is hot in something, how things can change, and just how AI has been a game changer for a lot of these companies. These numbers are crazy. Companies really put up such numbers, to be honest with you. Looking ahead, Q1 2027 guidance, management outlook for the quarter ahead. Revenue guide, 10.3 billion to 10.8 billion. Midpoint implies continued sequential growth. Non-GAAP EPS guidance, $44 to $46, up meaningfully from Q4, $39.25. Gross margin, 83 to 85%, sustaining record profitability. This is crazy. Momentum drivers. Since April's earnings call, SanDisk has signed 5 additional new business model agreements, 3 with new customers and 2 expansions, layering in multi-year revenue visibility and price stability that reduces historical non-cyclicity, if I'm pronouncing that right. Key takeaways for investors: beat and rise, but price for perfection. Every headline number estimates, yet shares dip after hours. A reminder that expectations, not just results, move the price. In all fairness, memory chip companies and semiconductors, they've been experiencing a lot of volatility, hence the reason behind that. And sometimes when a company is doing well and investors are so used to seeing these astronomical gains, even if the company beats earnings, the stock price can still go down. AI demand is the engine. Data center revenue more than doubled year over year as hyperscalers race to secure enterprise SSD and non-supply. Consumer segment still lacking. The legacy consumer flash business declined 32% year over year. SanDisk growth story is now enterprise AI story. This just shows you how a business can go from what they're traditionally known for into a different sector. And business is all about adjusting. Whatever type of business it is, you have to adjust your market, you have to adjust your environment, and this is what this company has done. Next, earnings, November 5, 2026. Watch for Q1 fiscal 2027 results and updates from August 13. Investor Day in the meantime. So guys, this was just a quick analysis of SanDisk, the best performing stock in the stock market. Stock price is really high. I'm not telling you what to buy and sell. I would probably DCA in this stock to be on the safe side, because if a stock is up that high, there's a potential of a really good pullback, and you don't want to be left with a bag all on top because it's going up exponentially high. You have to be really strategic the way you invest stocks in the stock market. Stocks don't always go up. Even if the company is doing well, the fundamentals are doing well, revenue beat and all that good stuff, that key metrics that investors look for, a company can still go down because they have gone up exponentially. So this is the Invest with Dennis channel, guys. We do quick analysis like this. You can find us on YouTube, TikTok, or Instagram. Remember, it's not a race, it's a marathon. And please invest wisely. This is not financial advice. This is just only for entertainment purposes. And peace and blessings to everyone, guys. And I'll definitely see you in the next one. Ciao.